Good afternoon. Welcome to Sovereign Asset Management. This is Brooke Wan speaking to you in Hong Kong. Today is 27th of July, Monday. Let's see the stock market review. The major U.S. equity index finished unevenly on Friday, with the Dow and S&P modestly higher, while the Nasdaq slipped. For the week, however, all the indexes were around 4% higher. To date, roughly 47% of the S&P 500 have reported, with more than 75% of firms coming in better than expectation. And in the coming week, reportedly around 30% of the S&P 500, including Dow Components, Mobile, and Walt Disney, are due to report. This week, release schedules includes the June new home sales today, with expectations generally for some improvement. And relative to the consensus, the consumer confidence data in July might surprise on the upside. Similarly, the June headline durable goods data might also deliver an upside surprise relative to the consensus on Wednesday. The main focus this week would probably be on Friday's GDP report, which includes the first print on the second quarter 2009 data and the comprehensive benchmark revision. Market consensus are for the advanced second quarter 2009 real GDP to contract by 1.25%. Many financial markets observers are already convinced that the U.S. economy will soon bottom out based on the recent positive indications from the index of leading economic indicators, which has now raised month-on-month for 3 consecutive months since April. If this being the case, we would expect a slowdown in the rate at which the U.S. economy contracted during the April to June quarter to be enough to convince even more that the U.S. will soon put the recession behind. After the release of U.S. GDP statistics, we will get a look at GDP for the Eurozone on 13th of August and Japanese GDP on 17th of August. This week, our trading idea is although investors welcome the constitutions of the various loose monetary policy, this also implies that considerable economic risks still exist. We continue to advise cautious near term, as considerable optimism may have already been built in after the sharp run-up in equity prices. And that's it for today. This is Brooke Wan speaking to you in Hong Kong. Thanks for watching.